So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto-specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen, and if that's true, it's going to be a great rest of the year. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden, traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset, and macro is sort of on the sideline.
For years, crypto has danced to the tune of macroeconomics, rising with low interest rates, falling with tightening cycles, and reacting wildly to every Fed press conference. But something has shifted. The drama of 0 to 5% rate swings seems to be behind us, and with it, the era of macro dominance may be fading. The noise is quieting, and for the first time in a long time, digital assets look ready to chart their own path forward. It's not just about surviving volatility anymore. It's about crypto finally claiming the steering wheel. Matt Hougan of Bitwise sees this as a turning point, not a temporary calm. In his view, the less macro interference, the better. Crypto's fundamentals, innovation, adoption, and now institutional interest are strong enough to carry the market without leaning on external tailwinds. The decoupling of Bitcoin from stocks earlier this year wasn't an accident, Hougan suggests. It was a signal that traditional investors are starting to understand crypto's purpose, not as a risk asset, but as a strategic hedge. And that shift in perception may be just the beginning. If institutional capital continues flowing in and Bitcoin's correlation to equities keeps falling, 2025 could be the year crypto stops reacting and starts leading. We will now bring you more clips from Matt Hougan's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So what are the catalysts that are going to get us to 200?
Yeah, it's great to be here. The short answer to that is demand and supply. The thing about Bitcoin right now, the reason this is the best moment in history to buy Bitcoin on a risk-adjusted basis is there's just too much structural demand for the amount of supply in the network. Bitcoin only produces 165,000 Bitcoin per year. Last year, ETFs bought 500,000 Bitcoin. I think they may buy more than that this year. Add on corporate buying and government buying. There is just too much demand. I don't think anything stops the train. We feel more confident about that $200,000 prediction today than we made it in December of 2024.
That being said, Bitcoin is now a bit range bound. We've seen between 100 and 105,000. What's going on?
Yeah, so there are select number of sellers who have been willing to sell around the $100,000 point. Why? Because people are human. Some of that selling has come from FTX, some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that, and then I think we end the year above 200K. Before I came to this event, I was at a major regional broker-dealer financial advisor event. They managed about $500 billion in assets. I had 5 times the number of questions about Ethereum than I had at any conference before that. And the reason was the things you were saying. People are wondering, how do I invest in stablecoins? How do I invest in tokenization? I think as they start to knit that together with what that means from looking down chain beyond Bitcoin, we're going to see some diversification beyond Bitcoin. Bitcoin is still king of the hill. It's still going to attract the most flows, but I think people are probably too skeptical on ETH and Solana flows into traditional financial products. I think it's going to hit up, sort of tick up at the end of the year. ETH went down, 60% from its all-time highs. If you staked and earned a few percent, you were still sad. So I think most people are betting first and foremost on ETH. The staking will be nice. It will be a reason to buy the ETF and not do it directly, but it's not a game changer. The game changer for ETH is the change in the Ethereum foundation. The game changer is the success of the Pectra upgrade. The game changer is maybe stablecoin and market structure regulation. I would look to those things more than I would the addition of staking if you want to see ETH ETFs go to tens of billions of dollars.
Right.
Look, I'm very optimistic for ETH long term. I'm less certain in the intermediate term. I think in the intermediate and short term, the story for Bitcoin is very clear, that demand-supply mismatch. I think ETH has more work to do. But I do think investors are looking at it as maybe almost a value play in crypto. Those aren't words that we use very often. Often the hype exceeds the fundamentals. It may be the case that the fundamentals are exceeding the hype on ETH. That can be interesting for people with, let's say, a 2-year time frame.
Right.
What are some of the macroeconomic factors that you're looking at that will impact the crypto markets? We see with the tariffs that had a lot of global uncertainty around trade, and that spooked markets earlier in April, but now they seem to be rebounding, as well as what the Fed might do and what U.S. Commerce Secretary Scott Bessent might be doing with the Treasury buybacks. What are you looking at?
Yeah, the best thing that can happen from a macro perspective is us not talking about it and not worrying about it. I mean, the crypto-specific drivers are so positive right now. I think we would be much higher today if we hadn't gone through this crazy V-shaped macro thing. It distracted all of us from the fundamentals being so strong in crypto. So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto-specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen, and if that's true, it's going to be a great rest of the year. Well, I do think we learned something from the April sort of tariff tantrum.
Yeah.
This was the first macro shock where traditional investors could access Bitcoin. If you go back to previous macro shocks like the taper tantrum or the last China trade war in 2018, traditional shops couldn't use Bitcoin as a tool. There weren't ETFs, there weren't regulated futures. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset, and macro is sort of on the sideline.
Bitcoin isn't just climbing, it's maturing. After years of doubt, volatility, and outside noise, something has shifted beneath the surface. What used to be a speculative asset chasing headlines is now being quietly redefined by the people who once hesitated: institutional investors, asset managers, and even governments. Their money is no longer on the sidelines. It's flowing in, and fast. With demand running laps around supply, the story isn't about hype anymore. It's about scarcity meeting scale, and when the world's financial engines start treating Bitcoin as a strategic hedge instead of a risky bet, the price targets once labeled bold start sounding like math. Behind the scenes, the infrastructure has caught up. The launch of low-fee ETFs, increased regulatory clarity, and the emergence of yield-bearing products are changing the way traditional finance approaches crypto. Investors are no longer asking if digital assets belong in portfolios. They're asking how much. Meanwhile, other corners of the crypto universe, Ethereum, stablecoins, and tokenized assets, are beginning to find their footing. But Bitcoin remains the anchor, the headline act, and the proving ground for this next phase. The bigger story? This time, macro didn't lead the way. Crypto did. And if that's the trend moving forward, the ceiling just got a lot higher. While Matt Hougan focuses on Bitcoin's near-term momentum fueled by ETF demand and supply shortages, Dan Tapiero pulls back to reveal a much broader shift. He sees Bitcoin not just as an asset, but as a systemic escape hatch, quietly replacing a failing monetary model. Together, their views form a powerful snapshot of both immediate opportunity and long-term transformation. Let's watch clips from his interview.
I think any asset that gets moved around by shifts in global liquidity is a macro asset. So, if interest rate policy moves rates down and the asset goes up as a result of the extra liquidity, that's a macro asset. A smaller asset will not move based on shifts in liquidity, but larger assets do. So I think, 5, 6, 7 years ago, I would not have said Bitcoin was a macro asset. I think today that it is. Yeah. I think it's, of course, a currency with no specific country that's backing it. Does that make it more of a macro asset? Well, one other thing, I think, look, store of value, maintenance of our purchasing power, an asset that you believe in over the long term that can maintain your purchasing power. If there's enough liquidity, it's a macro asset, right? I think that's sort of at the core of, why it's a macro asset.
We do see that on big rate moves, bond traders moving $1 billion in and out of Bitcoin, like as Jay Powell speaks. Yep. That is possible now.
Yeah, that's trading stuff, though. I mean, I think that, it's part of that macro framework. So if you're a macro portfolio manager like Dan and I were in the old world, it would be an asset that we would, buy or sell. But I don't think that's what makes it really attractive, right? It's the fact that over a long period of time, your purchasing power is going to be maintained. You're not going to get debased against any asset, let's say, that you're holding in the fiat world. And that can be real estate, bonds, stocks, whatever. If the dollar is the denominator or a fiat currency is the denominator, you're in trouble. You're in trouble. I really have always believed in that physical ownership, that the individual has the right and should be able to own his own asset. And so I started this physical gold business years ago in 09 and 10. And it's an idea about being able to secure your own wealth and to have something that can preserve your purchasing power. Now, I wish, of course, I started that with Bitcoin in 09, 10, not gold. But the reality is, I think there will always be a world, just like today, there are people who want to own paper gold. They own futures. And there's still a huge cohort that want to own physical gold. I think it's the exact same thing. I think our focus today, all of ours, is to further adoption and the elevation of Bitcoin. I think the understanding of Bitcoin as an important asset. I think Adam mentioned it's still institutionally very, very small percent. I mean, we have, probably only a handful of, let's say, pensions in the United States. Trillions and trillions of dollars that aren't even aware that, let's say, Bitcoin's at 100,000. So I think it's still very early. We think, with the advent of the ETF, the institutions have arrived. I mean, it's a complete joke. The institutions have not arrived, but the ETF, the Bitcoin ETF, most successful ETF of all time. And yet, I think Dan and I, especially talking to a lot of people in the traditional world, are still really nowhere. Which might be a surprise for people in the audience to hear.
What do they need to get there?
I don't know, $1 million on the price, or 500,000 or whatever the number is. I don't know. It takes some doing actually to understand things. I mean, if even trying to understand the white paper is a complex thing. So I don't want to, fault the smart guys. It's a hard thing to learn and understand, especially if you've had tremendous success already in the old world. You don't have a motivation. But I think it's, the ETF was the start. And this administration has been extremely important in elevating the profile. There's no question. It's been night and day from 9 months ago.
Bitcoin is no longer some outsider looking in. It's at the table now, even if not everyone's willing to admit it. For years, it was treated like a curiosity, something for retail traders and early tech adopters. But that's changed. Not entirely, not overnight, but enough that when liquidity moves, Bitcoin moves with it. It reacts like a macro asset because in many ways, it's become one. Bond traders, portfolio managers, and hedge funds are treating it like part of the global toolkit, not just a wild card on the fringe. But what makes it fascinating isn't just how it trades, it's what it represents. Unlike stocks, bonds, or real estate, Bitcoin doesn't rely on trust in institutions or policy decisions. It doesn't promise yield or dividends. What it offers is something more fundamental, a shot at preserving value in a system that seems increasingly unstable. In a world where fiat is constantly being eroded by inflation, Bitcoin is starting to look less like a gamble and more like a lifeboat. Yet, even with ETFs breaking records and mainstream platforms finally catching on, we're still early. Many major institutions haven't touched it. Not because they're not interested, but because understanding Bitcoin requires a mindset shift. And for some, especially those who've thrived in the old system, that's the hardest part. As we wrap up, what part of the conversation resonated most with you? Hougan's analysis or Tapiero's big picture view? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.